Hi, everybody, and welcome to episode 7 of Finding Bliss in Real Estate. I am Morgan Larson, your host today, and I'm sitting here in my home office again in lovely Placerville, California. And today's episode is all about mortgages, Memorial Day, and cake. Yes, cake. So I have with me one of my all-time favorite people, Lori Ackerman with C2 Financial. And I am going to tell a quick story before she introduces herself about how we met, which was over 10 years ago now. Can you believe that, Lori?
No, that's amazing.
And Lori is somebody who is very good at rescuing hard deals. And so I met her because I was helping some buyers buy a manufactured home that had an attached garage that was not manufactured. Plus there was a secondary garage with a unit up above. And that's like a major lending no-no, the whole combo, not like in and of itself. And so it was a difficult one, but Lori got it done. And that's how we met. So
that was fun. That was super fun. I do like those things.
And we've had lots of them since then.
Yeah.
So Lori, why don't you introduce yourself really quick? Tell the audience who you are, where you are, some of your hobbies, that kind of thing.
Yeah, thanks, Morgan. I am Lori Ackerman, and I'm with C2 Financial. I'm an independent broker, which gives me access to hundreds of lenders who are competing for my business, and then I can then pass that savings on to my customers. I've been in lending for 30 years.
Oh my gosh.
I know, right? And started out in servicing in the old savings and loan days. And then went over to originations and have pretty much fit the seat of every position there is in originations, processing, funding, underwriting, originations. And I even trained underwriters, so I know what they look for. And I think that's helpful, certainly, in telling the customer's story and diving into those more challenging transactions that, one you just outlined.
Yeah. So what about, what are some of your favorite hobbies?
Yeah, no, I'm here in Folsom, so just 30 miles east of Sacramento, and I'm a Southern California transplant.
Me too.
Right? And so 25 years ago, I moved to Folsom, and there's lots of really cool things to enjoy in Folsom. We've got the lake and the trails, and so I do enjoy that. But I primarily enjoy just hanging out with my friends. This weekend, we're probably just gonna, get together and do some barbecuing. I also enjoy gardening, and so that's probably one of my most favorite passions.
Okay, well, don't be so humble, because I also know that you like to do some acting, and maybe it's been a little while, but I know you've had a little acting career here in Folsom.
That's true. Yeah, thanks. You're right. The pandemic has definitely put that on the back burner. And in fact, though, recently I was invited to audition for a play next weekend. So we'll see if, maybe I get back into that here at our local theater.
That would be awesome. I know how much you love it. So
that's so nice. Thank you. Yeah.
Well, let's hop in. We'll talk a little bit about mortgages. So let's see. It's been such a crazy real estate market the last 8 months. And so from your perspective, what do you think has sort of driven that craze?
Well, you can certainly attest to that, maybe even more so than I. It's inventory. So, lack of houses on the market have really created this buying frenzy.
Well, I think there's a lack of inventory, but I think also, I feel like when everything kind of came down with COVID, I had a whole slew of buyers I was working with at the time, and they were all really excited to buy because rates were already pretty good. And then COVID happened. And then, as I recall, they even dropped a little bit more, right?
A bit, yeah, a little bit.
And so where I felt like there was hesitancy with the sellers, the buyers were just like, oh my gosh, I've got to take advantage of these rates. Did you feel that in your personal business?
I did find that the phone was ringing, for prospective buyers who were wanting to get pre-approved. And so That did stir some interest. And then the stimulus monies too have perhaps helped a little bit in terms of, adding to their savings for down payment or closing costs. And so, there's been some activity there. Pardon me?
I forgot about the stimulus checks, but yeah, I think that does help. People feel, for the ones who were lucky enough to be able to keep their jobs and keep their income going, it was such a good time, and it still is. What do you think? So have interest rates stayed pretty steady since throughout the whole pandemic, or what have you seen with interest rates?
Yeah, well, I think rates are, still amazing. Being in this industry for as long as I have been, the historical average was 6.5%. And so, we've been really fortunate to be in this low rate environment for a few years now.
Yeah.
In the last year, it probably dipped to, maybe the most historic lows. And rates are starting to tick up a little bit, but we're still able to secure financing at amazingly low rates in the high 2s, low 3s. It depends on terms. There's so many things that are tied to interest rate. So, it's difficult when someone calls and says, what's your rate? There's so many follow-up questions to that call.
Yeah. You did my loan when we moved in 2017. And Eric and I were so excited because we got 3% on our 15-year. And we literally thought, never, ever will the rates ever get lower than 3%. We were like, it's practically free. And I was wrong. You're like high 2s on a 30-year mortgage, right?
Well, and I just priced a VA loan out yesterday, and that was in the low 2s on a 30-year fixed.
Really?
So it's pretty crazy. Yeah, government rates do tend to be a little bit lower than conventional, but there's a little bit of a trade-off. There's mortgage insurance on the FHA option. VA has the funding fee, which doesn't necessarily affect the monthly payment per se, but but still, I mean, a 2.25% rate on a 30-year fix. Can you believe it?
No, I can't believe it. It's just insane. It's insane. Actually, I'm gonna have to go. I was just talking to some clients who are VA and looking to refinance, and I told them to call you, and they called Rocket Mortgage. I shouldn't even say the name. And they did get a really good rate, but what you're telling me, it sounds like they could get even better with you. So I'm going to tell them that they should call you, even though they already.
Quote.
That's what I always tell people. Honestly, everybody out there who might be watching this, I love Lori, and she does an amazing job, and she can shop all the rates. But I think that it's still important to talk to probably 2, maybe 3, to just get a little bit of perspective and knowledge, and make sure that you're working with someone too that can give you that knowledge. And I think personally, if you call Lori and you call any other mortgage company out there, you're going to see the massive difference in how she can educate you and honestly get you probably the best rates that are out there. So that's my little props for you.
Well, and I will, try to, match or compete, any lender. I mean, I really don't lose deals because of rate, usually. And in fact, another purchase came across my desk recently, and she was in a transitional point in her life, and she opted to go with a friend who's in lending, for the financing. I had talked to her first, but then she remembered she had this friend, and through the back door, if you will, got information about the terms that she ultimately got from this friend, and kind of looked up what I could get in comparison. I could have saved her probably $11,000.
Wow.
Yeah, so it is worth, just a backup call, just to make sure that you're getting the best terms possible. Not to say that pricing's everything. I mean, it's also about relationships and feeling comfortable. But
I think
I saw that and I was like, wow.
It's a balance. But when you're talking saving $11,000 or saving $50,000 over the life of a loan, or there's so many things. Actually, let's talk about that. So I was trying. So many of my clients are all about what is the interest rate, and that's all they think about. And I try to tell them, when you're shopping from lender to lender, it's more than just interest rate. And these are the things I think of. So I think of, when they're quoting you your monthly, make sure that it's including all the things. Because believe it or not, Lori, I lost a deal one time because the lender quoted them for principal and interest, but never talked about taxes or insurance. And we got into contract, and all of a sudden, instead of whatever they expected their payment to be, it was now several $100s more per month. And they were just overwhelmed and couldn't do it. It was really sad. And I just thought, okay, so that's one thing. Like, you got to be comparing interest rate, but make sure they're giving you all the info. And then the other thing too is like lender fees. I feel like it's often not quoted. And what am I right? Am I missing anything?
Well, fees can get a little tricky on purchase deals because, the one unknown is, what escrow company is going to be selected for the transaction. And those fees can vary, from escrow company to escrow company. But essentially, as a rule of thumb, I typically will tell my customers that on a purchase deal, that closing costs are going to be around 2% of the purchase price.
Yeah.
On the higher purchases, that's probably a little on the high side, but I personally always like quoting on the high side.
Yeah.
Because there's just nothing worse than saying, oh, you need to come up with another, $5,000-$10,000.
Right.
Not good. So, I don't hide anything. So certainly I don't think there's anything wrong with customers or buyers asking from their loan officers for a fee worksheet.
Mm-hmm.
It can break down the transaction and the disbursements and the fees that, they can anticipate seeing in the transaction and give them a visual.
Yeah.
It's not the same as a loan estimate. The loan estimate comes later when they're in contract and, the loan clock is really ticking. But a fees worksheet, I think, is a good tool to share that information. And then I also explain that there's a variety of ways to slice and dice closing costs.
Yeah.
So, the down payment typically, needs to come from their own funds or gift funds, down payment assistance, whatever. But closing costs can be sliced and diced in a variety of different ways. And so I really take time to have that conversation with prospective buyers.
Yeah, I think, some of the things, and it gets complicated, and it's hard sometimes for home buyers to understand all the different intricacies, but, sometimes a lender can offer a lender credit, or on the flip side, you can pay to buy down your rate. So there's like all these different things. And so when I talk to my clients, I try to tell them, try to figure out as much as possible apples to apples. If two lenders are quoting you 3%, what does that mean? Because one lender might be charging you to get down to 3% versus the other one's like, oh, I could actually get you 2.85, but I'll give you a lender credit at 3%. So it's wildly different from a cost perspective. And I think those are the things that, in particular, if you're working with an inexperienced mortgage lender, they often don't communicate it very well, that there's all these different options.
Well, and, at the end of the day, it's not so much about the rate, it's about the payment, and what you're comfortable with. I mean, I think in this environment, lenders, are relatively competitive with one another, and that there really shouldn't be too much of a significant difference, although that one that I told you about recently kind of took me a little by surprise, but that I could have saved them $11,000. But,
right.
We're all kind of competing for the same business. And so with that, what are you comfortable from a payment perspective? And then are you also working with a loan officer that's going to tell your story to the lender in a meaningful way? Because at the end of the day, it's, from a financing perspective, the lender, wants to know that this buyer is going to be able to manage this new debt, probably the biggest debt they've ever had, perhaps in their entire life.
Yeah. So that is a great segue into first-time home buyer. What or it's been a while, either scenario, what do they need to be prepared for when buying their first home? Like, what do they need? Go through the things. What do you tell your first time when you're first talking with clients?
Well, when I first talk to, especially first-time home buyers, when I answer the phone and I, have my introductions, I say, you've just made, the best first call and took the best first step you can in the home buying process. And that is to get together with a lender and find out what you're qualified for. And, and then work with somebody that, again, you're comfortable with, that's going to get the deal done and has experience. But, essentially, once you know that you have your financing in place, they in turn then can shop with confidence. It's addressing the 3 C's. That is, the bottom rule of lending. It's the 3 C's of lending: credit, collateral, and capacity. Gotcha. And so having documentation ready to support those 3 C's, if you will, is essential in terms of getting prepared to hit the market or hit the marketplace to look for a home. And so as far as credit goes, it's, making sure that your credit's in good standing, that the bills are being paid on time. I do have some tips and tricks, regarding how to maybe improve scores and things like that. Making sure that maybe you've paid down some debt, so that way you can afford the mortgage for the house that you're looking for. So oftentimes I'll be working with buyers 6 months, a year ahead of time, just to kind of prepare them for hitting the marketplace and looking for that perfect home. Yeah. And so 2 years tax returns, 1 month's worth of pay stubs, 2 months worth of bank statements, but having that documentation handy to, again, help the loan officer tell your story is really what that's all about.
Yeah. Let's talk about, because I think this is an often misconstrued or misunderstood thing, debt to income ratio. So when your underwriter ultimately is looking at somebody's debt to income ratio, they are including what? What are they really looking at?
Yeah.
What does income mean? Like, what are they looking at for income? So I'm self-employed, right? So practically can make up whatever I earn. But a lot of self-employed people in particular, they make something, but what they're really making is stated on your tax returns, right?
Right. Well, and the stating of income was certainly super popular before the Great Recession. Yes. Lenders have since gotten a little more savvy and do have self-employed borrowers in particular provide a little more documentation to somewhat try to ensure that what documentation they're being presented is accurate. So for example, especially as a result of COVID, the self-employed borrower is required to provide 3 months bank statements, for example, to show that the cash flow, is in fact there. And so a P&L will follow that. And so, that hopefully is as accurate as possible. But
so income's the number on your tax returns, people. So if there's a difference between what you bring in and what you report on your tax returns, because you take a lot of deductions, your income is going to feel lower reported than you think. Anyway, right. Income's the number on the tax returns. What is the debt side of it? Because a lot of times people don't realize everything that's included into it and then how much they're allowed for their debt to income ratio overall. Right.
Well, and if I may, just on the income piece, so the net income for the self-employed and then the W-2 income for the salaried, that's going to be your income. And the debt comes from the credit report primarily. And so the debt that's listed there is, essentially your revolving credit, your auto loans, perhaps mortgages on other real estate. And so
student loans.
Student loans. And if there aren't any payments showing on the credit report, typically a lender will either ask for a copy of the contract, but more often than that, will just add a 1% payment to that balance.
Okay.
So, so that debt, you're right, is included into that calculation. You know, occasionally there might be some debt that's off record, but for the most part, it's from the credit report, and then the housing payment, including taxes and insurance, mortgage insurance, if less than 20% is being put down, and any homeowners association dues.
Okay.
That's going to be your housing debt.
Yeah.
So the principal, interest, taxes, insurance, mortgage insurance, if applicable, homeowners association, if applicable, that's your housing debt, plus the debt on the credit report being your revolving auto loans, student loans. That's all added together.
Okay.
And so that figure is then divided into that income figure, whether it again be net for your self-employed borrower or gross for your salaried or hourly borrower.
Okay.
And then that's a percentage that comes up with the percentage. So if you have $1,000 in income and $200 in debt, 200 divided into 1,000 will be 20%.
Okay, gotcha.
And so that is your debt ratio. Different programs do have different guidelines and criteria. For the most part, the back end ratio, which includes that credit from your credit report, ideally shouldn't exceed 45. Okay. However, over the years, things have loosened up a little bit. And so it's not uncommon to see a back end ratio of 50%.
Okay.
You know, and then in some cases, even for your FHA, you might even be able to go as high as 55 or higher.
Okay.
VA, it's calculated a little bit differently. They use residual income. So
okay.
it's a different calculation, but you know, the concept is pretty much the same in terms of adding, dividing, subtracting, whatever.
So I think the overall moral there is all your debts that you guys have, the more debts you have, the less you're going to qualify for in a house. Essentially, the more consumer debts you have, the less you're going to qualify for on a mortgage.
Yeah, I mean, certainly subject to your income.
Yeah. Well, yeah, I mean, for round numbers sake, if you make $100,000 and you have no consumer debt, you're going to qualify for more house than the person who has a car loan and credit cards and student loan debt, because they're going to factor all that in.
Right.
Yeah.
Yep. Yeah.
And so that, people, is why looking at Zillow mortgage is effective, but not the whole story. To find out what you're going to qualify for.
Oh, because they don't have all of the
Right.
nuts and bolts, if you will.
Right. Yes. You know, and I think most people understand that on some level, but it's good to just put it out there that if you've got, you know, all these different consumer or revolving credits, debt, then it does affect, you know, you don't qualify for the same amount as somebody who has no debt.
Right.
Yeah.
Yeah, that's true.
Cool. Well, let's see. Let's talk about, you know, I get asked this all the time. Are there any special programs for first-time home buyers?
Yes, to a certain degree. There is financing on the conventional side with as little as 3% down. Government financing, FHA will allow 3.5% down, and then USDA offers 100% financing, but that's very location specific. And then VA financing also offers 100% financing.
Yeah.
Actual programs for first-time home buyers, you know, there's no special program. I mean, there's just, you know, some financing options per se, but there are down payment assistance programs available through your state, or maybe there's a down payment assistance in your local community.
Yeah.
But I do find that the funds for those programs, especially at the local level, dry out pretty quickly.
Yeah.
And then the programs on the county or state level, they tend to be a little more restrictive and a little more expensive. And so what I find is borrowers may not be able to qualify for as much going through a down payment assistance program as they would just looking at a standard conventional loan.
Gotcha.
So the criteria I had mentioned a moment ago, on a conventional 45 or maybe a 50% back end ratio, on a traditional down payment assistance program, they're limited to a 43% back end ratio, right?
Okay.
So I get people, well, can I get that free money? But yeah, but you're not going to qualify for as much.
Got it. Okay. Interesting. Yeah. It's funny, for as long as I've been doing this, I can't think of one that I had a client use a down payment assistance program. Now, I definitely know of buyers who have over the years, but I don't think any of my clients have, because they are kind of few and far between, it seems like, and a lot of different guidelines and so on. But definitely I've worked with lots of FHA buyers, lots of VA buyers, a couple of USDA buyers. So there's, I think there's I don't want to say a misconception, but there's lots of loans that are less than 20% down that are available to people, regardless of whether you're a first-time home buyer or not. Even FHA, which is often touted as a first-time home buyer loan, you actually can use it again. I know there's some rules. Aren't there some rules like you haven't bought a home in 3 years or something like that?
No, that would be, more if it was really a first-time home buyer program, but FHA doesn't necessarily have that criteria in particular.
Okay. I thought for some reason they had some sort of like, you can't have bought a home in 3 years or 5 years or something, or used our program before or something like that.
Yeah, I find that more on the agency side, and the agencies really stepped up over the last probably 10 years, where they, introduced the 97% financing. And depending on the program, one of those programs in particular for first-time home buyers does have that 3-year look-back requirement. And it also has home buyer counseling certificate that you have to provide in the loan package. So you do an online course and learn a little bit about just the home buying process and things like that.
I did help a client, my sister-in-law actually, who did have to go through that program. So,
okay.
And she actually said it was super helpful taking the little online course. She learned a lot. So
yeah, I even offer it, if I may, to people that maybe already own a home, but they come to me and they're like, I really don't understand, this whole financing process. I recently have helped a number of divorcees, widows, and their partner, their spouse handled the finances before, and they're now new to the lending finance world. And so I suggested, taking this free online course, just to kind of give them some background and help them feel more comfortable.
Nice. Well, last question I'm going to ask is just to kind of to go into the whole idea of, should you have or do you need 20% down? We kind of answered you don't need 20% down, but what is the advantages of a higher down payment versus a lower down payment? Are there?
Yeah, no, that's a good question. And really the only advantage is, the ability to avoid mortgage insurance. And, mortgage insurance can be a little pricey. It's, part of the monthly payment that really provides no benefit to you other than getting you the financing, I suppose. But it's really to protect the lender. And, depending on the loan size, it could be anywhere from $100 a month to hundreds of dollars a month added to your monthly payment. That again is just to protect the lender. And so putting 20% down on a conventional loan, FHA, it wouldn't matter because you still have mortgage insurance regardless. But on the conventional side, you get to avoid having that extra little payment for this protection.
Gotcha.
But really, some people opt to, maybe instead put 10% down or 15% down. So they're still not putting the full 20% down, but the pricing on the mortgage insurance does change at different levels. And so, you'll find that at 85%, the mortgage insurance, is a little bit of a drop in the bucket. And you're able to hold on to, that much more of your capital, because cash is gold, right?
Right.
So, so for $100 a month extra in the payment, and they're able to hold on to thousands of dollars, from that additional down payment, it sometimes makes sense. And oddly, it makes sense, but interest rates actually are a teensy little bit better, over 80%. The explanation really is that the lender, because they do have this mortgage insurance protection, are able to discount the rate a little bit. And so, you do get that potential rate break as well.
That's actually an interesting concept, because I think the perception is always that you get the best rates when you're 20% down. But I often find that the best rates are usually FHA or VA are like the bestestest. That's, yes. I made that word up. But they also have other fees that go with it. So it's like, a toss up. So, it really, I think the bottom line is that I've understood over the years is everybody's scenario is so different and everybody's goals are different. Some people need to keep their cash so that they can remodel the house, just for example. Other people would rather put all their cash into it and have more equity immediately. And there's just all these circumstances in between. And so I think that's where, people will do a Google search and think they realize the options, but they really need to chat with someone like yourself to go through their specific scenario and figure out their best couple of options so that when they find the right house, they can pick the right program that works for them.
Absolutely. Yeah, no, it's about telling the story and doing this for as long as I have been. I'm honored to, help these buyers, customers, in their quest for financing. And they've, allowed me to learn about, where they've been, where they are now and where they'd like to be in the future, and allowing me to tell their story to the lender. So that way the loan goes through quickly and smoothly. It's really, again, that privilege that they've given me to be that storyteller. And I'm not making anything up. I'm just, again, because of my background, especially in underwriting, I know what they're looking for. And to address those 3 C's, again, credit, collateral being the real estate that's being purchased, and capacity being their ability to pay the debt, so their income and things like that, and presenting it in a meaningful way. So that way, the underwriter just really has to sign and say it's approved, kind of thing. So, working with the right loan officer, I think, is really key.
Yeah. So, hey, before we segue into our couple of news article topics, where can people find you, Lori? We're going to put all the info in the notes, people, but Lori, where can people find you? Can they find you on Facebook or Instagram, or what's your website, or what's your phone number?
Yeah, no, I'm working from home. I'm in Folsom. I do have a website, which is super easy. It's my name, www.lori, Lori Ackerman, ACKERMAN.com. I do also have a Facebook page, and my phone number is 916 area code 214-4094. And I typically will pick up right away, but if you get my voice message center, I generally try to call back within an hour. To me, communication is really important. And if you're a text kind of person, that's an easy way to connect with me as well. But email, also my name is lori.ackerman@comcast.net.
Perfect. Yes. Always a good communicator. So, hey, I'm going to share my screen. Hopefully I can do this right. New computer, having some glitches, but seem to be doing okay. And here we go. Can you see my screen?
I can.
Awesome. So we're going to start here. I just thought this was a fun little piece of news for El Dorado County. Frank Vilt is a local cake maker, bakery owner who I've been following on Instagram for probably a couple of years, because who doesn't love looking at delectable, delicious pieces of cake and cupcakes and pastries?
Yum.
And he actually was just recently featured, or will be, on HBO's new show, Baketopia. And spoiler alert, he won. And I say it's a spoiler alert because they already wrote the results in here. So just wanted to put that out there. Lori, have you ever gone up to Frank Vilt's cake shop?
I have not, but reading his story, it's super exciting, and I need to get up there.
I know, it's funny, for as long as I've been seeing his stuff, and I love pastries, I have not actually been in there, probably because I couldn't control myself if I did go in. But I think now is the time I need to go in and support him, and maybe get some cupcakes or something. So,
right? Yeah.
So
Congratulations, Frank.
Yes, congrats, Frank, and everybody should find him on Instagram, and everybody should find his place. He's on Cameron Park Drive, 4100 Cameron Park Drive. So easy to find, easy to get to, and he does all sorts of stuff: wedding cakes, cupcakes, I think other pastries and things too. And
I think
Lori
I read he does vegan.
Oh yeah, he said he doesn't typically, but on the episode he did, they had to bake vegan, and I guess now he has opened up a product line of vegan stuff.
Oh wow.
Yeah, so no thank you for me. I love butter.
Right.
But for the people out there who don't love butter, now we have another option.
That's awesome.
And so then over here, I was just reading about, both these articles are from Village Life. So this one is talking about the ceremonies that we normally have in the county, which I hate to say it, that I've been here so long, and I actually had no idea that there was a veterans monument here in Placerville. It's right off of Ray Lawyer, where all the government buildings are.
Oh, okay.
Yeah, and I didn't even know that we had that there. Here, I'll share a couple pictures. I found it on Google.
Oh, I had no idea. What a pretty setting.
I know. And so I guess normally they do some sort of live Memorial Day ceremony. But this year they will be doing, I guess they did this last year too. They did it virtually. And so there's a couple spots that you can view it if you're interested in watching the ceremony. One is on our local channel 2, which I don't know if you would get that in Folsom, but I guess we get it up here in El Dorado County. I also hate to say that I don't think I've ever watched our local channel 2. Or it's going to be streamed on 3 different Facebook pages. We've got the El Dorado County Military Veterans Facebook page, the EDC Veterans Alliance, and the EDC Veterans Monument page. So 3 different pages that'll be viewed on. So, check it out. I think it might be kind of cool to watch. Yeah. So what are you doing for Memorial Day?
Well, it's going to be hot. And so trying to stay cool is probably going to be my biggest priority. I do have a friend who has a big pool. I have a pool as well, but I tend to not use that for some strange reason. So,
sound like a true pool owner.
Right. But we have such a good time gathering together, and they have an outdoor kitchen that we call the Oasis. So I'm sure we'll be cooking up some yummy food and getting together. And I'll probably be in the garden. Maybe I'll practice my sides for my upcoming audition. So
yes, good. Yeah.
How about you?
Trying to arrange some pool time because I don't really have any plans for Monday. Tomorrow, though, I'm going to a graduation party, and I'm actually doing a tribute workout. I've started doing CrossFit about 6 months ago, and so they have these various tribute workouts. This one's called the Murph, which is Michael Murphy, who's a fallen soldier. He's got a very interesting story, but his favorite workout, he would do a mile run, then he would do 100 pull-ups, 200 push-ups, 300 squats and then another mile run. And to cap that all off, he wore like a 20-pound vest while doing it. So my gym is doing that workout tomorrow morning, and I will be participating. No vest and some scaled versions of pull-ups for sure, because I can't even do one real one. But I think I'll survive. I'll make it.
I'm not worthy.
It won't be pretty. And I don't know if I'll be able to walk on Sunday, but
Sounds great.
Yeah, so it should be a fun weekend. I'm really excited. I think the weather is going to be nice for all the pool parties and, all the getting back into meeting with people parties. So,
yeah, welcoming summer.
Yeah, exactly. Well, thank you so much, Lori, for coming out and being a part of our show. I really appreciate it. I think it's a lucky episode, number 7. So
thank you. Thank you for having me. I really appreciate it, Morgan.
All right. Well, I'm going to stop the recording now. Oops, wrong button.